Hey guys, it's me, Adam Iobst with A-Team Realty LLC, and I'm here once again to share with you the latest news and information on the DC metro real estate market. Now, it doesn't take a brainiac to figure out the real estate market in our area is in fact slow. It's more of a buyer's market than a seller's market, and we're going to continue to see some more challenges here in the 2011 year that I'll get into a little bit later. But before I do that, let's quickly analyze here where we are right now and what the current market trends are. The median sales price in our area is decreased last month, about 8% now for most of the area, and that's a normal seasonal trend that we see often. So I'm not too alarmed by that particular measure. I do have some happy news. If you live in the Washington, D.C. area, your property values on average, or the median sales price, has gone up about 12% over the last year. So that's a little silver lining. Property values have also increased. Again, the median home price over 2010 has also increased in Northern Virginia and the Maryland suburbs. That includes Montgomery and PG counties. So we are moving in the right direction, although it is slow. Baltimore County experienced a decrease over the 2010 year of about 7%. The sales volume in our area experienced a decrease last month, and that's a normal seasonal trend. It was down about 23% in January compared to the month prior in December. Sales volume in general has gone down for most of our market area. We have a lot fewer sales in Virginia. They're reporting about 11.5% of a decrease over the 2010 year. Maryland, we experienced a similar decrease of 7%. Baltimore County and D.C. on the other side have experienced an increase of sales activity. Baltimore County reporting an increase of 10.5% over the 2010 year, and D.C. about 9.5%. So we're in a mixed market condition right now in terms of sales activity. I'm expecting the sales activity to increase slowly, nothing like last year because we don't have the first-time home buyer tax credit in place. But I am expecting to see the normal seasonal trends here with an uptick in sales volume starting in the spring, continuing into the summer, and then decreasing again in the winter. The days on market. In our area, the average days to sell a property has in fact increased recently. Last month we had an increase in our area of about 6.5% on average, and that's a normal seasonal trend. But what I also noticed is over the year, over the 2010 year, we had an increase in most of our market areas on this measure. Baltimore County experienced an 8.5% increase over the 2010 year. Maryland suburbs also experienced an increase of 6%. And Virginia, Northern Virginia, experienced an increase of 28%. Their average days to sell a property in Northern Virginia last year around this time was 57 days. And last month it was reported at 73. So that's a substantial increase of about 28% for the number of days to sell a property in Northern Virginia. On this market measure, I'm expecting it to see pretty much flat conditions here. It may experience a slight decrease here into the spring and summer months where typically buyers come out and write offers on properties. But I'm expecting to see a real flat measure there for the rest of the year. The next market measure is the sale price to list price ratio. And here this is a market measure that lets buyers get an idea of how much negotiation room relative to the list price that they have on that price point. In December, the average sold to list price ratio was 92%, indicating that properties sold for 92% of what they were originally listed for. Now in January 2011, that number had decreased slightly to 91.5%. That's a slight change and not much to get too excited about if you're a buyer. However, the trend might be interesting to buyers because a year ago in our area in January of 2010, the sold to list price ratio was 93.75%, or almost 94%. So if you follow the trend, you're seeing that properties are in fact selling for much lower compared to the list price than they had previously. So, and some of that might be caused by the short sales, the distressed properties out there, that certainly the bank-owned or REO properties. So we're going to probably continue to see that trend as more and more of the shadow inventory comes up and lowers those price points. Okay, well, what does all of this mean? Here are my predictions here for 2010. Get out your notepad, everybody. I believe that we are taking off the training wheels. Compared to last year, we had that wonderful first-time homebuyer tax credit that really sparked a demand in the early part of the year. We don't have that luxury this year. So we're taking off the training wheels and we're going out on that bicycle on our own, and we're going to find out exactly where the market demand is. We still have a pretty high inventory with the distressed properties. And let's not forget there's a lot of resale properties out there too, just folks that are looking to sell. A lot of folks have held off for months and years, and it's just getting to the point now where they need to sell, and so unfortunately they're having to price their properties competitively against these distressed properties. They're still out there, and I think they're going to be out there for a few years to come, unfortunately, until that excess inventory burns off. Okay, so we're taking off the training wheels. I'm also predicting that we are moving towards identifying or redefining what a normal real estate market is. And there's going to be a couple of challenges in the way or that we're going to learn from this year. The biggest one that I foresee is the financing. The financing for purchases is going to evolve a lot this year. There are new guidelines being issued and adjusted real time, and the investors that are supplying these loans are very cautious about loaning money against these properties. So you have to, as a buyer now, you have to make sure that you're in an eligible community, that your property condition is adequate, in addition to being able to qualify for the loan yourself. So it's going to be a challenging time to get loans, and it's important that you work closely with your loan officers to identify potential challenges this coming year. I'm also expecting to see an increase in overall rental demand in our area relative to home buying. I think that 2011 will be a year where the rental rates will increase, maybe significantly, and the overall rental demand is going to be high relative to in the past, where several first-time home buyers may consider renting before buying this year. I think that's just the current market that we're in. So the silver lining is the rental demand will increase, and along with it, those wonderful rental rates that many of us are charging now that we're landlords because we can't sell our properties. So hopefully this has been informative. I have packed a lot of information into a very short period of time. I appreciate you guys following along. Feel free to look at the graphs that I've uploaded on my website. I'm going to be updating them every month and updating a new video every month here, so you get my take on what's currently happening out there. Feel free to contact me directly with any questions. Again, my name is Adam Iobst. I'm a licensed real estate broker in Maryland, D.C., and Virginia, and I'd love to work with you. Take care, and I look forward to doing it again. Bye.